Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Tuesday, August 2nd, 2011 is sponsored by Realtik. Let's get into the mix, folks. The markets are taking a massive hit today. Dow Jones Industrial Average right now down 156 points, NASDAQ down 47, S&P down 21 on the day, basically 1.5%, give or take a little bit on the indexes. Many people out there would have thought a rally would take place today after the Senate passed the spending cuts and debt ceiling raise bill. However, that's not the case. Why not? Well, yes, it's good that we're not going to default on the U.S. debt right now. That's a good thing, right? But the bottom line is you still have this possible debt downgrade hanging over the U.S. Again, the cuts equaling $2.4 trillion over the next 10 years. It may not be enough to keep us from that downgrade. And then the other factor is Europe. Europe is a mess right now, folks. Italy and Spain are crumbling as we speak here, and that is crushing their markets over there. The dollar is jumping in response, and obviously the global perception right now is that not only is Europe a mess, but frankly the United States is headed for another recession. Why another recession? Bottom line is, look at the economic data lately. Again, we're going to get jobs numbers later this week, but you've seen ISM numbers yesterday that were just absolutely atrocious, two-year worst numbers in those ISM manufacturing index numbers. And bottom line is this: we also got spending, consumer spending numbers tomorrow. Ugly numbers, folks. There is no other way to describe it. Absolutely ugly numbers, and that obviously is hurting this market across the board. So again, it's looking like recession in the U.S. Europe's in even worse shape over there. The only safety area is the dollar, even though the dollar is not to be that considered that safe. You can see the dollar's trading up a little bit on the day, and these factors obviously are putting pressure on the overall markets to the downside here. Let's go back to the spiders. You're looking again at the spiders. Spiders are finally getting a small bid. We have trend line support right there that it hit, and let's just look at exactly where it was. And look at this perfect double bottom, guys. See this low blue line? If you zoom out and you go back to late June, basically over a month ago, a month and a half ago at this point, look at that perfect little support line. Look at the bounce. Absolutely astounding, folks, how amazing these are. Now, I continue to do swing trades, folks. Whether you're long or short, there's always money to be made in this market. And again, I put out another trade alert that got triggered today. You want to be involved here at In the Money Stocks because we're giving you the same things that we give the hedge funds. The hedge funds trade off this. We give it to you as an individual investor, as a trader. You get the same information. And again, we have a free trial. The free trial is 7 days, and you can join at any time. Join the Research Center or the Intraday Stock Chat, or try out both for all we care. Rock it, make money in both sectors, assuming you don't have to work during the day. The chat room is awesome. Otherwise, if you do, then the Research Center is for you. All right, now, again, great little move here on the spiders to the upside, but again, the question is it just one more push up before another leg down? That's exactly what's happened so far. Today, the market's gapped down, pushed up, then fell further. Then we had a sideways bear flag, fell further. Then another little pop, fell further. And this looks, again, exactly like we just saw here. Again, although I have to say, it's all about the dollar. If the dollar can start to fade, then I do think this market has a chance of getting involved a little bit here to the upside. We'll keep a close eye on that in the coming minutes, all right? All right, so again, let's take a look at a couple other things. What are the Q's doing, which is the NASDAQ 100. Same thing. They're getting a bounce, but they're getting crushed again today. We're seeing weakness across the board. Basically, everything out there is down except for a few key positions. I'm going to touch on them just shortly here. Let's take a look at a couple other things here. Number one, Goldman Sachs trading down 56 cents. Goldman Sachs is down 56 cents on the day. And again, you can see the nice little pop here off the lows. And again, Goldman Sachs is not taking that much of a hit in all fairness, right? I mean, down 65 cents is basically 0.5% when the markets are down about 1.5%. So actually that's showing some strength there in Goldman Sachs. Another stock is showing strength. 3M is doing a little bit better than the general market. I actually like this one because of the daily chart. If you go to your daily chart here, take a look at the support level right here. See this pivot low? This is actually what's keeping this stock up right now, and it's on a major support level after a pretty substantial fall. So just keep your eyes on 3M down in this range. I would say down in the 85.50, 85.60 area. That's really what you're watching at this point. All right, and again, let's take a look at Caterpillar. Caterpillar is actually getting hit a little bit today, down $1.50. Although interestingly enough, look at this right on the 200. Now, again, you can see how a lot of these big stocks, these large cap names, whether it's Goldman Sachs, which is outperforming the downside of this market, or Caterpillar or 3M, they're performing better. And that's really what you want to start to pay attention to. Which stocks are doing the best in a market that could be breaking lower? And that's really the big question, right? I mean, that's what we're looking to find out is whether or not this market's really having a breakdown. And if you go back to the Spiders Daily, this is what's so scary about the daily, folks. And by the way, we actually hit just a major pivot low right here. This is the low I just showed you on an intraday basis. If you remember, you zoom out, look at this. To these levels right here. See this back in mid and early June, these pivot lows. That's exactly what we hit. And on the daily chart, that's right here. But the question again is, did we break the 200? Have we officially now changed this market into a downward moving market? Has this pivot high at 137, if I zoom out, has this pivot high now, is that the top of the market for literally months, if not years to come? And the reason why you know that is essentially this trend line right here. And if we confirm, we haven't confirmed today. You have to actually confirm tomorrow, assuming we close below this level. But I'm watching things very closely, very, very closely. And by the way, folks, look at the rally here in this market. They are pushing this market up a little bit more here, although not much, but a good little bounce off the lows, down just $1.90 on the SPY. Dow is now down 145, so it's gained about 10, 15 points since we started this video here. All right, in any case, very interesting things going on in this market. And again, Obama going to sign that debt ceiling bill into law, but at the same time, it's not the end game here. That was just one piece of the puzzle, and the more economic data we get, the worse it looks out there. We're going to get the ADP private sector jobs numbers tomorrow. That will be a very, very big clue as to where this market's going, as will a couple other numbers, obviously non-farm payrolls, unemployment report on Friday. All right, let's take a look at JPMorgan. JPMorgan is really not down that substantially as well. And again, this is one thing of interest I want to point out, folks. If you have to pick a sector that's doing the best, you probably would say it would be the financials. JPMorgan is down less than 1% as well. And Bank of America, if you take a look at Bank of America, it's getting hit a little bit more sharply today, down about 1.8%. So that's more in line. Let's take a look at Wells Fargo. Wells Fargo actually performing decently, down about 1.3%, a little less than the market. But again, I would say that this right here, financials are doing probably one of the better performers, a little less overall in average than the market's down, while you are seeing other sectors taking a little bit more of a hit. I see some technology plays getting hit quite sharply as well. One other kind of pseudo-financial credit card play here, this is a credit card, MasterCard is the stock. MA is actually up on the day, up $1.25, so that's actually a nice little move considering how weak the market is. All right, let me look at what else we have. Solar stocks are lower. First Solar down about $1.15, only 1% there, so that's not a horrible drop. And I'm just noting here that if we take a look at Cree, I was looking at Cree earlier, and Cree continues to be an outperformer, up 20 cents on the day, so I think that's important. I like the Cree daily chart because you put in this bottom, and then you made a higher low. See a low here? There's a give a low right there and then a higher low. And I like the fact that it's holding above the 20 right now. It still hasn't been able to break through this line, which is a pivot high. You can see it's pierced it on two separate days. But again, I wager that you probably do have an upside little move coming. Any bounce in this market, Cree's probably going to be an outperformer, considering it's positive on such an ugly day. NASDAQ's down, and this would be in the NASDAQ, obviously, since it's a tech play. NASDAQ's down 1.6%. And Cree's actually up 18 cents. Now, by no means is 18 cents substantial, but when you put it in comparison with the NASDAQ taking the brunt of the storm here, then it's not so shabby at all. All right, so again, just continue to watch that. We'll continue to see how it all plays out. Looking across the board here, folks, and just kind of wagering to see exactly what's going on. And overall, market's looking definitely on the interesting side here. All right, folks, enough for today. One thing to just say, come join the Research Center as a free trial. Take the chat room as a free trial. I'll talk to you soon.